Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is June 8th, 2015, and today is Monday morning. Looking at the economic calendar today, we have a G7 summit today. That's in Germany. It's happening all day long, so I'm not sure how much that's going to affect the markets on this Monday morning, but it's good to know that it's happening. The other thing that's going on today is at 14:30, 2:30 South African time. You have a Canadian building permits coming out. It's a monthly number. It should have some effect on the markets, but not too big. So let's look at what happened towards the end of last week. We had a debacle in the Euro USD here. We had this double top, as you can see here. Let's take out our drawing pen and start. Right here you had this almost head and shoulders on this side, and here's the second shoulder. This would be the head. And you see that it didn't break higher. Okay, at the NFP number, it just rallied a little bit, but it corrected itself. So, and now we're at 111, and I would presume we'll try to hit this 110 again before we could see some sort of taking out or some sort of trading range. But it is trading quite well, as you can see here. It's trading in tandem, basically. This would have been not the best place to short it at this 113.40 level, but it definitely was an opportunity to get in the short side. Dollar getting stronger across the board, and we'll see that with some of the other currency pairs. But as you can see here, I would wait for some sort of retracement, maybe until the 110 level, see if it holds this level at 111, because it's just underneath the line, so I'm not convinced that it's completely breached it. So those are the two scenarios, though. You can maybe buy a little bit, see if there's an anticipation of a little bit of a rally in the Euro USD, or wait for it to falter until 110 and to buy it. To go short it at this level, I'm not sure if that's so advisable at this stage, just because it's not showing me that it's continuously weak. So you could just gauge it with a small position and then get a little bit more aggressive as you go up. Looking at the USD Japanese yen, this was a major rally in the USD Japanese yen. We broke this 121 level last week, and then we just took it from there. We're at major threshold. Even on the weekly calendar, you'll see we're all-time highs. Monthly calendar, we're coming to almost all-time highs here since 2001. So this is a major retracement, as you can see here, over the past 13 years for the USD Japanese yen. So that's a big deal for the Japanese yen. It's probably still in play. It could even go up to, I would say, 130-ish level. Could rally all the way up there. So you have oodles of opportunities to jump into it, but just be careful. Looking at the Dow Jones, as you can see here, we broke this 18,000 level last week, and we're now trading at 17,836. Does this mean that the markets is over? No, I don't think so. I think we're just retracing it, maybe to get down to 17,600 as we are in the summer months. But this was almost a double top. So, for those who started shorting in around this area, 1811, that's a good place to have picked it up on the short side. I would start covering as we're heading closer to the 17,786 level, just 50 points shy of it. I would presume for the summer we're going to be in a range of about 50 to 100 points a day. I don't really see some major action as we're going into the second quarter of the year. Looking at the gold, the commodities really took a tumble last week. So this is very fair to have, and look how beautiful this trade would have been. Shorting it at 1226, which was the upper range, and we've had these lines up for the past 3 weeks. So you could back reference it to see where I was talking about, and then once it broke this 1211 level, continue breaking it through, and then 1183 it's broke, and now we're at the threshold of 1171. So we're just trading at that level right now, as you can see. The question is where we're going to go from here. Are we going to maintain this lower level, this lower trading range, or are we going to bounce right off it? So I would keep an eye on it on the next couple of days for a possible bounce, okay, because we have sold off over 50 points over the past month. Maybe a possible $10 bounce but be wary because you're picking bottoms here. So I would first suggest teetering into it and teetering out to it, just because you don't want to overexpose yourself. Looking at oil here, also on the bottom of its range. Really, this was a beautiful graph we had set up already a few weeks ago, and 62 is the higher trading range, and $58.62 is the lower trading range. We're at that level. I'd really like for it to break this 57.70 level to show me that it's a true short, and then we may have like a little bit of a secondary support number of 56.25. But looking technically, we're at the bottom of the range, so technically, there should be a point here where we can pick it up and it'll jump back to $62. It hasn't broken this range yet, so I'd be more inclined to think that it's closer up. I like this spot a little bit better at 57.62 to pick it up than to pick it up at 58. So just realize that if you're picking it up here, there is room still for it to go down. Just because it's not completely at the bottom of its level, because this previous resistance and this support is 57.8ish, 58ish, I would say, just to round it off. It's not a perfect science, that's what we've told you before. So those are some trading ideas for today. I want to wish you guys a great trading day. Thank you.